You're in the Business Insurance Zone with me, Steve Savant, national insurance columnist and financial color commentator. And today on The Biz and all this week, it's September, Life Insurance Awareness Month. Today, weathering the economic storm with #1 author and speaker, Tom Hegna.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm Steve Savant, your host, and we're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And day 5 with us, the author of Paychecks and Playchecks, Mr. Tommy Hegna. Hey, Tommy.
Thanks, Steve. Great to be back.
Again, I'm just going to offer this again. If you're a first-timer with us and you say, Steve, I really like what you're doing and I'd like to write a case. If you write a case with us and you just put in the memo in the app and the remark box, hey, I saw your show with Tom Hegna, we'll send you this book, all our videos of this week and the prior set of series that we did about 2 months ago, and we'll send you Tommy's website so you can hop out and see every other video that he's got out there. We'll send it to you all absolutely free because we want you to be part of a person who's been not only a major producer, but now is an MDRT platform speaker. And Tommy's all over the United States. Yeah, actually, you're doing some international stuff too. And I want you to really benefit from somebody that's been there and done it. And today we're talking about something that was huge because actually, Tommy, you wrote a huge article about weathering the economic storm, our topic for today, because now we're setting up, we're just at the front end of the elections, right? We don't know what's going to happen yet. And we know that we're kind of at a turning point, left or right. I'm not trying to be political today. I'm just trying to say we just know that we're up against it. And I noticed that the world is so small now that everything seems to be correlated. So even if we try to diversify ourselves, we're kind of attached. If something happens bad in Europe, it affects us. If something happens in China, it affects us. So with the world shrinking the way it is, how can I prep myself and be ready for the possibility of weathering a storm? Now, you wrote this first article right after the debacle of 2008.
Yeah, so the market was crashing. The Dow was at 6,600. If you remember that, like everybody thought the world was coming to an end. It was bad times. And what's interesting is that some advisors then went on and had the best 12 months of their career during this, and some advisors had the worst 12 months of their career. Well, what was the difference? The advisors who did well focused on guarantees. Like when the markets are plunging, they focused on the financial strength of their companies, they focused on guarantees, they focused on giving people returns without the downside risk. So those were the advisors who had the best times of their career, and then the other advisors were struggling, still trying to do it as they always did. But I got a call from the American College. That's where you get your CLU, CHFC, and that type of thing. And they said, Tom, we need you to write an article on why people would still buy life insurance in markets like these, because there were agents all over struggling. And I said, you know what? There's always going to be 3 reasons why people will always buy life insurance. And the first one, I said, life insurance is a women's issue. Now, we talked a little about this, yesterday or the day before, I guess, on one of our segments. But I kind of talked a little different. But you may want to add in something on the life insurance as a women's issue. Well,
it is a women's issue. And think about this: it's the survivor. Right? We always think about, hey, I have money on my life. Yeah, but you're not there. And your wife or your spouse is there. And your children. And especially when it happens in a young marriage where there's young children involved. But when I think about women, I'm thinking about the idea of making sure that the women in our life, the people that we love, that we have deep affection for, are completely covered. I don't want them guessing, selling off assets, having to move out of the home that we've lived in all our life. I want these things to actually work for us. And if we head into, and I'm just thinking about this, Tommy, your article was 2009, but if we actually went through a double-dip recession, and that's what may be facing us in 2013, I don't know, that same article applies for that kind of double-dip recession.
Absolutely. And the point of my saying life insurance is a women's issue is this. If you look at the facts, 70% of the baby boomer women are going to become widows. They live longer than men. They typically marry men who are older than themselves, so they get to look forward to widowhood of 15, 20, 25 years. So I say to women this. I say, women, here's the deal. You're going to live with the consequences, good or bad, of how much life insurance is on your spouse. Now, I'm not saying it's not important for women to own life insurance. We covered that on Tuesday, and if anybody doubts that, we did a whole session on why it's so important for women to personally own life insurance and how underinsured they are. But the facts are 70% of the time, women are going to be the beneficiary of the contract. And I always tell women this, you don't have to take my word for it. Find a widow who's living well and find one who isn't. There's only one thing that separates those two women, and that's life insurance. Life insurance is a women's issue, and if we don't, you know, we're talking about all these statistics about how underinsured people are. Who's going to pay the price for that underinsurance? It's going to be the women and the children that pay the price because women live longer.
Well, when I think about it, these are all issues that we're trying to set up if we have to weather a storm. But if we didn't have an economic issue, we should be talking like this anyway.
Absolutely. But think about it, when times are tough, how much tougher are they going to be if you don't have the life insurance and somebody dies? See, people die when markets are down. I know it's a shocking event, but people die when markets go up and people die when markets go down. And if people die when markets go down and things are really tough, you're going to have just absolute tragedies happen in books of business. And if I was an advisor, I'd say not in my book of business, not in my book, maybe somebody else's. I'm going to make sure that every woman in my book of business understands that life insurance is a women's issue.
It is. It's so important for us to get this. And I want to go back to one part of your article about the guarantees. I have to say that 2008 has left a psychological imprint on the minds of baby boomers that right now the #1 issue in America is preservation of principal. I mean, the rate of return is really close second, and if there's tax advantages, they're there, but the #1 issue is guarantees and my principal being safe. I mean, that's what you are alluding to, and I say, I still think that imprint, that's not changed. The baby boomer, that's our thought life.
And when we come back in the second half, we're going to talk about that life insurance is a tax issue and life insurance is a wealth transfer issue.
Because we have to really up our game, I think, as producers, because we're really approaching, this is Life Insurance Month. That's why we're talking about making you aware of all the issues, including, by the way, the painful consequences when it's not done. When we come back after the break, we're going to talk more with Tommy Hegna, top of the table speaker, right after the break.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Companies in our business are always touting service, products, and underwriting. And we do that too. But here's the difference. Now enter the world of the elite producer with a value package that cuts us out of the pack. A BD that approves social media marketing of non-FINRA products and doesn't take an override. With the best competition desk in the industry, and for our loyal producers, a true group health plan. No one offers that. Brokers Alliance does.
Well, welcome back to the Business Insurance Zone. I'm your host, Steve Savant. We're with top MDRT platform speaker and #1 author on Amazon.com, Tom Hegna. Tom, we're talking about weathering the storm. I mean, when the American College comes to a guy like you, they could have gone to anybody. They said, write an article about this. I read your article, and when it was written, 2009, it was in response to the cataclysmic events of 2008. But it is as apropos today. And especially for people that feel like, hey, we may be on the precipice of maybe even a second recession or a double-dip recession. If that's true, it's more important now than ever. Talk a little bit more about how not only the article, but you have a couple other points that you thought were just huge for our producers.
So the second thing I say that why people will always buy life insurance is a tax issue. Now, what am I talking about? Well, in the book, I show the picture that shows the history of the marginal tax rate in this country. And most people don't know, through our parents' lives, the highest marginal tax rate was over 70% most of their lives. It was over 90% for a bunch of years. Where are we today? We're in the mid-30s. Well, IRAs and 401ks made perfect sense back when taxes were 40 and 50%. You're going to take money out of your check. You don't have to pay tax on it, gross tax deferred. When you retire, you take it out, you pay 20, 30% tax. Makes perfect sense. We're $16 trillion in debt. State, local, federal governments are broke. We have unfunded Social Security obligations of over $44 trillion. Medicaid, it's $68 trillion. Business Week last December said why it's worse than you think. They added Fannie Mae, Freddie Mac, $213 trillion of promises made that can't be kept. I ask people, where do you think taxes are going from here? The math says two things. Budgets will have to be cut and taxes will have to go up. Well, if taxes go up, how much sense does it make to say, oh, I'm not going to pay tax now when I could pay at mid-30s? No, I'm going to take my tax break now. I'm going to let it grow tax deferred, and then I'll pay tax when it's 40 and 50%. How much? That makes no sense. So 401ks and IRAs make sense in a declining tax environment. They do not make sense in a rising tax environment. So what am I talking about? Why not do some tax diversification? We always talk about diversification and asset allocation. Why not tax diversification? So what I'm saying is put money in your IRA and 401k up to the match. If you put in 4 and they give you 4, that's 100% return, take that. But above that, consider putting that into permanent life insurance, because when you take the money out of permanent life insurance, Steve, how does that come out?
Pretty good free.
Income tax free, and income tax free is a great way to take money out. So I say life insurance is a tax issue. The last thing I say is that life insurance is a wealth transfer issue. See, a lot of wealthy people don't think they need life insurance. We did a show yesterday on estate planning failures. All these wealthy people, they don't need life insurance. They got $40 million. Yeah, they don't need life insurance in the traditional sense. But what they do is they need a way to transfer their wealth to their children and their grandchildren. Now, if we could do that with stocks or bonds or Coca-Cola cans, we would, but we can't. It just so happens the best wealth transfer vehicle is life insurance. And so we've got to talk to these wealthy people. You do not need life insurance in the traditional sense, but you need it as a wealth transfer vehicle. It's the most efficient way to transfer wealth.
I think about recapturing some of the massive losses in 2008. I mean, this was the lost decade. 2001, 2, and 3, and 2008 were bad boy years for the S&P. I've noticed that some of our producers are now starting to gravitate to replacing principal into the future. So in other words, let's say I want to be able to recapture all my losses. I buy life insurance and I send my original principal on to the next generation, and I'm done. So my principal's always preserved. What's left is how I'm going to live, whatever I live on. I'll use those assets to live on, and whatever my lifestyle is, and however long I'm going to live. Yeah. So it's kind of a principal way of, now I'm guarding my wealth by saying, no matter what happens in the market, I'm going to send my original contribution, or the original corpus of my investment, I'm going to send that on to my kids anyways. I'm just going to get up and out of here.
Yeah. I also go in the book on how many retirees right now are living what I call a just-in-case retirement. They don't touch why just in case, there's all this uncertainty, just in case. They're living a just-in-case retirement. Far better would be if they would just take some of their money and buy a life insurance policy, and that goes to the kids. Because I even told my own parents, don't deny yourself a retirement. I'm not expecting your money. Go out and live your normal retirement. Whatever you leave me, I'll appreciate, but don't live a lesser lifestyle. So what I've already done, what my wife and I have done, is we bought life insurance to go to the kids. That's going to go to kids. We're done. Now we can spend everything. Now we won't spend everything, but we could. Sure. We could spend everything. We don't have to worry about, well, we should leave something for the kids. No, we've taken that care of that with life insurance. So I think the best way to leave money to your kids is life insurance, because you put in this much, you can leave them this much if you do it when you're young. And then go out and enjoy your retirement and spend it. And so that was really what the article was all about, that no matter what happens in the economy, life insurance is a women's issue, life insurance is a tax issue, and life insurance is a wealth transfer issue.
Well, I like the idea of what you're framing. You're framing our discussions with our clients, and you're giving us a leveraged tax way to do this, even in hard times. Absolutely. So we're able to actually do all of our dreams and bless the people that really are close to us, whether we're getting ready for the second recession or whether we're going to go on to good times. This works either economy.
Yeah, see, in hard times, what I say is you got to use math and science on your side. We've talked all week about leverage. Listen, you get leverage through guaranteed lifetime income, and our industry provides guaranteed lifetime income products, and we talked about the mortality credits the last time. Well, with life insurance, you experience mortality credits with lower premiums the younger you are and the higher death benefits. And so when times get tough, you got to use math and science to solve the problems, and you do that by using the power of mortality credits. Guaranteed income that you'll never run out of when you're alive, and it'll pay a death benefit when you die.
I love it. If you want Tommy's book, just write me one case, put it in the remarks. I'll send you paychecks and playchecks, including all his videos. You can watch all of it at www.brokersalliance.com. As soon as you come out of our homepage, just hit the on-demand red button. And if you want to go ahead and write Tommy, just write us, thebiz@brokersalliance.com. We'll make sure you get all the communication. That's the Buzz on the Biz for today. Get in the zone, the business insurance zone.
The Biz is brought to you by Brokers Alliance, a national leader in insurance products, support services, and educational workshops. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.